So is it 23,000 or 27,000 for Bitcoin next? We're going to address that on today's show, as well as a whole lot more with this banking crisis that's going on. There is a whole lot that's moving within the market. And I guess one should expect volatile times, which is exactly what we're experiencing. We had the big push up, we had the rejection, price came down, but it's still holding within the levels that I gave you yesterday. I gave you the lower side target, and I warned you that the dollar index was the main concern, which we had a massive engulfing candle that took place on the daily chart over there. And that is the reason for this pullback, at least one of the reasons. So without further ado, let's get straight into it. Let me know in the comment section below, what do you guys think comes next? Is it going to be 27,000 or 23,000 for the Bitcoin price? Now, what you're going to see in today's headlines, at least according to TED Talks Macro, is, of course, the important economic data that's come out. So US annual PPI declines to 4.6% in February versus the 5.4% which was expected. And then number two, you have the Swiss government holds talks on options to stabilize Credit Suisse, since they have now defaulted and pretty much having a major banking collapse. And then you have disinflation and other central bank considering bailouts. Risk is to the upside in equities and crypto. That is at least according to TED Talks. He's been pretty active on Twitter lately, so getting a lot of valuable info from him. Shout out to him over there, and thank you for the insights. Now, there's a lot that's at play over here, and Jerome Powell, the reason we're so fixated right on Jerome Powell is because ultimately we know that US policy affects the entire global market, and anything that Powell does is usually what the other countries are going to follow suit with, and ultimately they basically decide which way the markets are going to go. So there's a lot of important considerations over here. We're going to look at all of them, wrap it up, then we're going to look at the price charts as well, and I probably even have a couple of trade setups for you for today. So let's get into it. The 𝗕𝗏𝗄𝗃 letter over here says, just in, major European bank tells Credit Suisse to seek urgent liquidity backstops from the central bank. There it is. We are going to see the second backstop of a major bank soon. No government or banking system wants to be the first one to collapse. Backstops are coming. Backstops meaning obviously bailouts. And here you have it. So breaking, they're going to provide liquidity. That's the central bank. Switzerland's central bank are going to provide liquidity to Credit Suisse if necessary. Once again, it's the same progression of events. First, it's not considering intervening. This is what they always say. Then it's intervening, but it's not going to be a bailout, they say. And then finally, it's providing liquidity and backstops, meaning pretty much they're bailing them out. So yes, that is the money printer goes brrr, as JazzNaz82 says over there. Guys, let me know if you are present. I see, yes, Gabriel. Yes, I am up early, always awake, always working. Jake, I see you in the chat there. Afonso, welcome everybody. Welcome Banter Girl. Welcome everybody is here. Dizzy, welcome back, guys. Cool. Let's move on over here. So next over here, 8.6% CPI in Europe. Inflation is accelerating in France and Spain on the last reading. And yet the EU bond yields are falling off of a cliff as bank stocks melt down today. The ECB meeting tomorrow, where they're supposed to be raising at least by another 50 basis point. Absolute garbage fire. So pretty much markets getting completely wrecked. But this is really Bitcoin's time to shine. This was the reason that Bitcoin was created, pretty much during the last financial crisis and banking collapse. And it's interesting to see where we are pretty much 4 cycles later. And here we are just before the 5th cycle, 5th halving event, where Bitcoin has its time to shine. So will it do so? That is the question. I recommend go through to my Twitter over here. I shared a great video. I won't play it now, but there it is. Go and have a look at this. Money in a rich man's world. Great video over there from Carla. Good content. Okay. Economic data that's coming up now. Is there anything of concern today? If you look over here, at least for Europe, we're going to, of course, have the monetary policy statement. That is probably the most important thing. And then we have the unemployment claims, which will show us how the job market is doing. Remember, bad news is usually good news because it shows that jobs, or at least the economy, is contracting from the Fed's perspective, and then they can ease on their interest rate raises. So here you have Charlie says that US producer prices increased 4.6% over the last year. That is the smallest year-on-year increase since March 2021. PPI peaked at 11.7%. Now, this has a whole bunch of implications. So now the Fed funds rate is expected to sit around 3.5% by the year end. It's traders a week ago, they were betting that that was going to be 5.5%. Remember, the Fed funds rate ultimately is an indication of the interest rate, right? So where is the inflation, or excuse me, the inflation rate? Where is that sitting? And you want this number to slowly but surely come down. And this is now what the Fed are hinting at, right? They were adamant and they said, our goal is to bring inflation down to 2%. And they keep repeating that every single meeting. Our goal is to bring inflation to 2%, and we'll do literally whatever it takes, even if it means breaking the market. Now, for the first time, here you have, according to Zero Hedge, the Fed have now hinted that the new inflation target is 2.8%. So they're raising the bar, right? That means that we could potentially be closer to reaching the inflation target than what we were before, because 2% is much lower, means they have a lot more work to do over there. So here you have Stephen, who gives basically the situation that Powell's in. And it is a tough situation, and he has a chance of leaving a legacy for himself, but he is also in a catch-22 predicament. So he says Powell has a chance now to put himself in the history books next to Volcker, hike 50 basis points. He would be, if not for Silicon Valley Bank, come out and prove that 6% CPI is not acceptable. And then he says and I quote, I gave the banks a lifeline, but inflation is still the main focus, would immediately rebuild the Fed's credibility. So if basically Powell came out and said that he gave the banks a lifeline, but ultimately inflation is the main focus, and he slaps a 50 basis point on the table, that would give the Fed credibility. But what would that do to the markets? Of course, it would wreck the market. So he says when Volcker was hiking rates, the pressure on him to stop was absolutely massive. Wall Street, Washington, D.C., even Main Street. Then he said, but he knew that the pain and any recession he caused would be nothing compared to the entrenched inflation that was destroying the lower or middle class. Should clarify that I do think that they give 25 basis point next week. Powell is no Paul Volcker, just thinking through the scenario. And then he says, here comes that same political pressure that Volcker got. Senate Banking Chair Brown hopes that the Fed pauses rate hikes next week. So you can see now you're starting to get pressure from all angles, wanting Powell to start to pivot at least and reduce the interest rate raises. But Joe says it very well, yeah. Ultimately, it really doesn't matter. CPI doesn't matter. What happened over the last 3 days has done Powell's job for him. Credit creation at banks will collapse and the economy will slow down. Inflation will taper off as a result. Any rally on the view that the Fed doesn't need to raise anymore is silly. If they don't raise, it's because of systemic risk to the banking system, which is not a positive. So he's basically saying that if Powell does now obviously pivot and give no interest rate raise or hike at least, or he gives a 25 basis point, that is mostly because of what's going on with the banking crisis at the moment and less to do with inflation. And it really is a gun to his head right here. It is. This sums it up very well. Basically, you have a button to press. You're going to either choose hyperinflation or Great Depression. Which one is it going to be? So we're going to find out next week. I think it's on the 22nd of March that result should be coming out, which is also interesting because it lines up with the quarterly close, right? We now have the quarterly chart, which is going to be closing out in 15 days and 18 hours. And this is what it looks like according to Bitcoin at least. Now, this is ultimately a massive range. If you're considering the range on a quarterly basis, this is your range. You have your upside range, which is capped on the upside potential at 28,992. Very strong resistance over there. And the downside is going to be 13,880. So until such time, if price does push up to this level, this is why I've said that this could still potentially just be a relief rally, a major relief rally. And later on in the year, or maybe even next year, things could go lower. It's possible. I'm not betting on it, but it is possible. So what would that look like? If you did see this run up, tap that level, and it could potentially still come back down and sweep those lows, that 13,880 level, and then consolidate around there for a while. And then you start the new run according to the timing cycle, which is still going to be looking at a peak in 2025. So that is a possibility. Keep an eye out on this. The close of this candle will be important. Let's see how we rally. This is why I say it depends on how price gets to 28K. If price gradually gets to 28K, consolidating sideways and up, I would say that would be more bullish, and then there is a high probability that the bottom is in. But if price rapidly gets to 28K in the matter of a couple of days. So we've had a huge rally already. Let's say for the rest of this week, we just absolutely melt up into this zone. Then I would definitely consider taking profits, because you don't want to go up too quickly. You go up too quickly and you take the elevator back down. As for Ethereum, Ethereum's upside is capped at 1,917. That's a key quarterly level over there. And then the downside is at 743. So we'll revisit this on the close. The close is going to be more important. I just thought it's worth mentioning for you guys to keep an eye out on. Now, Michael says over here, I mean, he's mega bullish at the moment. He says the news is worse and most stocks are above their Monday intraday lows. I'm not crazy and not being stubborn with this. This is not what you tend to see if a major tail event is here. Nothing has changed. March was always about volatility and not direction, melt-up. And guys, I can't really emphasize this any more than what I have already. This is what's so important. Take a look at this chart over here. You have the lunar collapse. You have a massive sell-off. You have the interest rate hike fears, massive sell-off. FTX collapse, massive sell-off. And then you have Silvergate, right? This was the low that we set in on the Silvergate collapse. I mean, this is not just Silvergate, because this chart was made when Silvergate collapse is taking place. We since know after that we had other banks that have started to collapse, not only in the US, but also in Europe. Europe is collapsing too, yet Bitcoin price continues to hold up. What does that mean? That means that as long as we can weather the storm for just a little bit longer without capitulating down from these levels, that is showing you that there's incredible strength in the market, and we're going through a major transitionary phase within the markets. And ultimately, you don't want to be looking to necessarily short to new lows, but instead you want to position your mindset with the open possibility that the market is truly shifting. We're transitioning into a sideways movement, so into a consolidation and a range-bound environment whereby we're moving sideways and up over the next couple of weeks to months. So I really hope that you guys get that. Like, do you understand that when it's a bull market, or at least when there's terrible news but prices continue to go up, it's a bull market. When there's phenomenal news, but prices absolutely tank, no matter how good the news is, then it's probably a bear market. Think of, for example, when for most of you, you were here, right? Remember when the South American countries were announcing that they're accepting Bitcoin as their reserve currency? Big players are coming into the space. Elon Musk, Cathie Wood, Michael Saylor, mega bullish. But we just kept going down and down and down. That's indicative of a bear market, right? We have the inverse of that right now. The world is absolutely falling apart over here, but yet the sell-offs are becoming less and less. That's something that you need to pay attention to. Cool. Next. All right. Price levels over here. So I am glad to see that the 21 exponential moving average, which is the yellow one, I'll zoom in a bit more for you. The yellow one has now reclaimed above that pink one, which is going to be the 255 moving average. Historically and long term, that 255 has been incredibly important. We were under that for a long period of time, which was pretty scary. We consider this now a deviation. You really don't want to see prices come down there again. I pretty much don't ever want to see prices come down below that level again. Otherwise, you would have to flip incredibly bearish. So for now, this is the ultimate support. This has to hold in this 21,000 to 21,500 level is, in my opinion, absolutely critical support to hold. And if you did get your positions, if you're lucky enough to buy at this low, the wick low, that's where I got most of my entries in. All my USDC converted into Bitcoin at 19,700. I'm pretty much going to be holding those positions for hopefully a lifetime. I'm moving those onto cold storage. And as long as price doesn't come below here, I'm going to keep holding them. If it does, I'll obviously sell that position out. Okay, next. What about the upside? Upside, we know we got that behemoth 200-day or 200-week moving average, which is the orange one over here. It's just a matter of time before we crack it. We've now attempted it. Look, once, deviated, came below. Twice, straight rejection. Third time, straight rejection. If history repeats, usually you're looking at about the fourth time, you're going to absolutely smash it, and then it's going to be explosive to the upside over there. Guys, do me a quick favor. it's not me, guys. It's the team over here. They send me messages. I just got a message over here. Please hit the likes. Please hit the likes. It really helps to get the content out there. It takes 1 second of your time, and I would appreciate it. Cool. Next, 4-day chart over here for Bitcoin. You can see this strong horizontal. Very similar to what I just showed you on the weekly, where you have that 200 moving average. This is kind of your breakout zone. Big rejection over there. Failed breakout for the time being. Still have 1 day and 18 hours to go. So it's going to be very important how this candle closes. I don't want to see this candle turn fully red. It's okay if it closes like that next week. As long as it consolidates, I do expect that there will be a breakout over here. That level comes in at $24,577. $24,577. Upon the breakout of this, not only are you going to have a new swing high, you're going to have a new swing high above that, meaning that, of course, higher highs and higher lows, but you're also going to have a cross between the moving averages, the yellow above the green, above the purple. That presents a long-term trending move that could potentially take off to the upside. So you'll be wanting to watch that over there. We've covered this a lot, Gaussian channel. I'm more interested in the weekly close over here. 3 days, 18 hours to go. Closing candle, anything above those previous closes that happen on the left-hand side with these candles. So anything above 24,269, it's in line with this. That signifies the breakout. So this is really the control zone. This is where both bulls and bears are fighting for territory. And when it comes to your trading, what you want to do is you always want to think, who won the battle? Who won the battle? Where was their acceptance? So if the battle is won below, bears hold advantage, right? They still have advantage, and means that there is risk that things could go lower. As soon as there's a close above this, it's like, it's like an army in the olden days where they had obviously their swords and their shields, and they would forge forward and push forward for territory. Once you reclaim a certain territory, they retreat and it's over. That territory has been taken and the bulls would win. So if the bulls get above this line, bulls win. You want to look for upside momentum in the coming weeks. Close below this line, bears have momentum, means that there is risk to the downside. That's how you want to think about it. Okay, high time frame, there is some good things that are going on over here. Again, I know this time's different. This time is different. 100% things have already changed within the world and the markets. But if you're looking at the net unrealized profit or loss ratios over here, which essentially shows that coins that haven't moved in 10 years, what you're looking at over here is from a timing perspective as well as a drawdown perspective. Everything matches the previous bear markets. So 264 days. This was a short one in 2018 with 131 days. And here we are 243 days. So one of the most brutal bear markets that we've had. But if you've made it this far and you still have cash and capital, it really is time to consider entering some of that into the market. And I'm not saying aggressively, but slowly entering it into the market, because the probability is high that the cycle low is in soon. If it's not in already, it's in very, very soon, timing-wise. So you would be looking for further upside potential. And I think that's in line with this crypto con. I don't know why someone would follow someone that's called a con, crypto con. I don't know why. Why would you go with that name, bro? But anyway, the MVRV Z-score, which is what I gave you yesterday, he basically said here in April 2021, when everyone was waiting for $100,000 Bitcoin, I used long-term data to sell my coins that I bought under $10,000 at a price point of $54,000. Now he's basically bought in for this cycle at $16,500, and it's his mission to help you succeed. Here are 5 steps in a thread. So I won't go through all the steps. You're welcome to look it up if you want to. In essence, what he's saying is when you see these oversold metrics, which ultimately means you're entering into the buy zone from an on-chain metrics perspective, this is speaking specifically to Bitcoiners, because altcoins could still get absolutely annihilated in this environment. There could be a lot more downside, but you're talking about timing-wise, right? Timing-wise, it lines up with this chart that I just showed you, the NUPL, net unrealized profit and losses, and it lines up with that. It's in the buy zone, and I showed you on this chart over here, the white line is now coming out of the green zone, and yes, it did attempt to do that over here, but if you go back historically, the same thing happened, right? It took a couple of attempts to get out of the green zone. Green zone is your buy zone, same thing as this, right? That's exactly the same band. Green zone is your buy zone. There's a high overview for you. Anytime you came into the green zone, you want to be buying. When you approach near the red zone, even if you start to just put the tip in there. Okay, now I'm becoming rude like Ran. Maybe it's rubbing off on me. But as soon as this metric gets into the red zone over there, you want to start laying off those positions and dollar cost averaging out. So you dollar cost average in now, dollar cost average out in the red zones. You're in the green zone. What can I say? You're in the green zone. That's why I've been buying. I'm not trying to get too emotional. My time frame is high enough that I'm willing to commit to these, call it investments, for the next 4 to 5 years. And therefore, I see it as an opportune moment, especially since it lines up with what I see on the lower time frames. So I've been shouting about that. Next, the dollar, the DXY, the DXY. Here, yesterday, I outlined these wicks. You remember I told you, be careful. We're coming into the key yearly level at 103.49. You're welcome to go back to that video. I said there could potentially be a bounce off of this area, and this is crypto's biggest risk at the moment. The risk is that the dollar rallies to the upside and crypto takes a bit of a sell-off. Now, look, in all fairness, I didn't expect it was going to do it in one candle, but I told you this is your range. This is your range that you're working with, pink box to pink box, smash straight into the top of that, and already we're contracting and coming back down. So you're just playing this DXY within the range over here. Pretty much risk is to the downside when it moves up like that, and risk is to the upside when it starts to come back down, and it's just ping-ponging between those levels over there. So keep that in mind with your trading. Now, Bitcoin dominance is absolutely eating altcoins alive. Massive moves up over here. But, this creates maximum opportunity. If you are looking at this as a range, then scaling into some altcoins, I'm not saying all altcoins, but some altcoins could be wise when you're within this region, right? We're slowly approaching this region over here. Bitcoin dominance comes up. You would expect the range to hold. Bitcoin dominance comes down. Altcoins rally. You break that level, and then altcoins really begin to rally. Go pull up that. Maybe I should do it quickly. What's that thing called again? The Bitcoin altcoin cycle. What's it? Is it altcoin? Is it Bitcoin? Is it alt season? There we go. Is it altcoin season? There we go. Let's pull this up. Where are we within all this stuff? Okay, we are here. Perfect. So have a look at that. Is it altcoin season? You can imagine if Bitcoin dominance continues to push up over here into the range highs at about that nearing 50% level, that's going to absolutely smash the altcoins. And then this is it altcoin season index is going to move far to the left. And if you want exposure to crypto, I mean, you're taking on incredible risk over here, but technically you want to be buying when it's in this red zone, right? This is when you want to be buying altcoins, when it's fully Bitcoin season. You want to start scaling out of your Bitcoin. My main positions at the moment, my major portfolio is in Bitcoin still. But as this slider starts to move further to the left, I'll start pushing those Bitcoins into altcoins, into the altcoin market. And as it starts scaling over the 50% level over here, I'll slowly start scaling out of my altcoins back into Bitcoin. And it's really as simple as that. You don't have to overcomplicate it. You can go through the history of this over here. If you look at that, there's the history of the chart. So it hasn't come down to as low levels as what the previous bear markets had. We unfortunately only have the history back from 2017. But just go to that site, play around over here. It shows you, for example, it determines if it's Bitcoin season versus altcoin season based on how many coins have outperformed Bitcoin in the recent weeks. So there's a whole bunch of metrics for you. Cool. Next. All right. Total 2. Here we have it. That's going to be directly correlated to what the Bitcoin dominance is doing, which is why we got a rejection off of the red zone over here, straight into that 605 billion, started to pull back. We're at the mid-range now. Impartial to what this is going to do. I'm just going to kind of wait to see if it's going to hold mid-range or not. There are long setups on the altcoins. I'm going to give you some of those trade ideas. I might even take the trade live on today's show. If it looks good enough. But that's ultimately what you're looking at over there. You're also sitting around that mid-range on total 3. We're still hoping for something like this, right? Big push up, consolidate, reclaim the range high, and then altcoins can have their time. Okay, just in. I need to verify this. This is apparently from Watcher Guru, according to JP Morgan. They say $2 trillion could be injected into the US banking system by the Federal Reserve Emergency Loan Program. That's huge, guys. Massive $2 trillion. Will some of that have a spillover effect into crypto and into equity markets? Well, we'll look at that on our equity or at least our liquidity sheet in a moment. Okay, Delphi Digital says that the stablecoin market caps over the past 8 months, here they are, USDT, Tether, the one that's always been the elephant in the room and been claimed as what will blow up the entire crypto market, continues to surprise everyone. Up it goes. USDC goes down due to the DPEG. I saw it came back, obviously, into PEG. I'm sure you all know. This morning when I looked, it was slightly down again. So I don't know, guys. Let me know. I don't have too much of an opinion on stable coins. My guess is as good as yours. Let me know in the comments. What do you think? Are you holding USDT, USDC, DAI, RAI? What are you holding as your stable coin? All right, let's look at this. James, he says less than 30 billion of these stable coins now sit on exchanges, wiping out 2022's gains. That is a $15 billion drawdown in 4 months. So you're coming into a key level over there if you want to look at this as something that you can chart. And here it ultimately is. This is very important, guys. So what he's showing over here, basically that there's a massive drawdown in the stable coins. In order for crypto to succeed and not only survive, but in order for it to thrive, you want to see this chart go up. This chart has to go up. This is the stablecoin supply. The same way that the US markets and all markets work, right? You need to see money flowing into the economy and the economy growing. This is ultimately our economy. This is showing us that our crypto economy is shrinking. We need this line to start to turn back up. We need more stablecoins coming in. That's kind of like our own inflationary environment. And for healthy markets to survive, contrary to popular belief, there is a certain level of inflation that's required. We don't want Bitcoin to be inflation. Well, it is inflationary, but very, very low inflation rate, right? It doesn't mint many Bitcoins. Can't talk English here. Bitcoin doesn't have many Bitcoins mined. The mining rate becomes less and less. Let me just give up on that. Let's just give up on that. Let's look at the liquidity over here. Okay, liquidity from the US is kicking on up. We want to see a convincing break. I've shown you that. If that 2 trillion comes in, of course, that's going to be huge, right? This is going to absolutely smash through here. Direct correlation to the price. Direct correlation to the price over there. And then the People's Bank of China has the little histogram is starting to slowly move up. But if we want to see a move like we did in January, you need to see it come all the way up to these levels at 74.69. Okay, next, something that just came out from Bitcoin Archive. He says, breaking, Fidelity has just opened its Bitcoin trading platform to millions of retail customers, and it's commission-free. That's according to The Block. The Block usually gives pretty reliable information. They have 37 million retail accounts. We know Fidelity. Fidelity is one of the biggest investment firms with the highest level of assets under management probably in the whole world. They are absolutely enormous. And we know that they've been dabbling in crypto and building trading desks and things like that. So I don't know, maybe this ties in with this Operation Choke Point, because we know that these guys are mega powerful enough to influence and control governments. And here you have them closing off banks, right? Like I wonder what the correlation is, if there is any sort of foul play over here, because you have 𝗲𝗏𝗿, any buyer of Signature Bank must agree to give up all their crypto business at the bank. Let this he says here, let this settle any remaining doubt. The Signature closure was a targeted takeover in the darkness of a Sunday night. Oh, it sounds like a novel here. In the darkness of a Sunday night, to kill off legal activity from the banking rails. Operation Choke Point 2 is real. Coming to a bookstore near you. Make sure that you get the latest edition. So here it is in black and white. Any buyer of Signature must agree to give it up. And look, who's going to take over? Are these guys going to take over? Is it going to be these big, massive institutions? Possibly. Okay, look, I'm getting another message over here. This is not me. It's the team in my ear. 1,000 likes, and then we take the trade live on stream. So make sure you smash the like button. I know there's 1,800 of you live right now. I will give you the trades live on stream if you smash the like button. Okay, important. This is very, very important. So this is all around the liquidity. I think this is such a good thread. It's worth taking a couple of minutes to go through. He says, Nick, when the money supply contracts, then banks will start collapsing. This trend is very predictable. Each time that the money supply is contracted in the last 150 years, which is pretty much all of our lifetimes, we've had a banking crisis. The M2 money is down minus 2% year on year for the first time in 100 years. Take note. So look at the previous massive collapses that have happened within the markets. When that money supply came down this aggressively, we've now crossed below the zero line. It is very serious. And I mean, it can also create extreme opportunity, right? If your time horizon is long enough and you want to dabble in crypto, which is, as we know, one of the riskiest asset classes or speculation classes in the entire world, then imagine what your returns could be when this eventually does spike back to the upside. Like, look at that, the money supply at 26% when crypto was hitting those all-time highs, all the way down to now negative 2%. Can you imagine the rocket fuel if you get your timing correct in this cycle? So he says, so right now, most people think that Silicon Valley Bank was all about issues in tech. But the real issue that prompted the bank run was the tech companies that were running out of money. Why are they running out of money? Because the Fed is tightening the money supply. And so long as the Fed continues its quantitative tightening program, I suspect that we'll continue to see the money supply contract, which means that other banks could have issues in the future as more companies run out of money, meaning that contagion continues to spread. So I don't know how deep this contagion will run. What I do know is that we have more information at our fingertips than what the US president had a couple of years ago, which is an unbelievable statistic, meaning that many years ago when you had these financial crises, then people obviously weren't able to see what was coming because they didn't have access to that information as quick. Now we have things like Twitter, Facebook, Instagram, all the different social medias, and the basically peer-to-peer broadcasting, so eyewitness news, if you want to call it, is sometimes more reliable than what you're getting from the media companies. And we get this information so quick. My point being is that, is the worst already going to be priced in, or could this contagion still spread further? Because by now, most people in the world, I feel, who have serious money in the banks would have heard about this and had the opportunity to withdraw. So have we seen the worst? I don't know. Let me know in the comments. He says here, now he has the $1 million question. Will the Fed continue tightening that money supply? On one hand, quantitative tightening is a valuable tool to fight inflation, which the Fed still needs to do. But on the other hand, it's likely destabilizing the financial system. What will Powell do? He says, yeah, well, the Fed has already promised to print money to make sure that depositors of Silicon Valley Bank are fully bailed out. That suggests tightening is over. But the Fed will likely be repaid most of what they need to print by the FDIC, meaning minimal net change to the money supply. I suspect that the Fed will try to sorry about that. I suspect that the Fed will try to thread a needle and bail out bank depositors that need to be bailed out, while also staying committed to its fight against inflation, meaning continued rate hikes and money supply contraction, maybe at a slower pace. He has the money supply over here. You can see it. He says, I'll be watching the Fed balance sheet closely. Right now, assets are 8.3 trillion, down 8% from peak due to quantitative tightening. This is what is creating that money supply contraction. If the Fed balance sheet keeps going down, then it's a signal that quantitative tightening is still occurring. And if it goes up, Q is back. Very, very simple, really easy. I won't go through the rest, but this is the only sheet that you need. I mean, I have my own version, which I'll show you guys, which we can monitor and track. But if you see this go back up, then basically QE is back one way or another. The overall monetary supply is increasing, meaning that assets can run. Charts. Renko is green, looking to make a new swing high. Same levels that I showed you on the other chart. You can see how important this zone is, right? There it is. Let's make it nice and big for you. 1 second. So let's grab that. That is basically your breakout level. You start to get above these zones, which is right where price is now. This 25,000 level is so, so important. If you get above that, you start to have major, major upside potential, big breakouts. And you can see over here, lows, higher high in relation to the left, higher low, and you're looking for the next higher high. Will there be a breakout? That is the $1 million question. Well, if you look at this chart over here, you can see, of course, we've tapped the top over there. Technically speaking, you could actually run a short trade over here. I mean, from a risk to reward perspective, there is an opportunity for a short position, which would just look like this, right? You got your stop above the top over there, the swing high, and you're looking to short all the way back down to the bottom of the channel. You can take your first TP. This is if you do want to short. I'm not going to take this position, but if you do want to short, that would be the short trade. There's your risk to reward ratio is a 1 to 2.9. I'm sure you could probably get a little bit better. You could probably get it at about a 1.2, I would say 1.26, because I'm sure we'll spike back up into that level. And then you could take most of your profits here at about 21,600. That mid-range is going to be a key and important level. Look, I'm not taking this. I don't feel like shorting Bitcoin right now. I really don't feel like shorting Bitcoin. I'm happy with my entries and I'm going to hold them. So that's what I'm seeing. I understand this is a probability game. If you're a trader and you don't want to be, what do you call it? You don't want to be emotional. You want to be unbiased and unemotional. There, it's as simple as that. You came into the range high. You have the channel, the rising channel over here. You tap the top of the channel. There's the setup. I've given it to you. Sweet. Next. Okay, you got the quotes moving averages also signaling that it's possible that this is going to turn over. You do still have a lot of room over here, so it might just be a consolidatory phase, which is what I did outline on yesterday's show. I said the best thing that the bulls will be looking for is a consolidation. Super guppy, which is the EMA ribbons, have flipped green. As long as they remain green and you don't get another gray band over there, you can consider this a fake out to the downside or bear trap, whatever it is you want to call it. And you can expect that we'll just kind of grind our way sideways and up. Okay, there you got it clean as anything. You have the range high. Price is currently pushing up against it again. How many times will we tap it before breaking through? Currently, we have 1, 2, third attempt, consolidate sideways over here. If you consolidate sideways, you'll start to create a massive bull flag. Let's see. Let me show you the bull flag. So you can see it like that. This is the bullish case. If you're a bull, you'll be looking for that, right? You got the pole, consolidate, 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 and then you're going to break out towards that 30K level. The measured move from the pole still takes you to about that 30K level. So that's what I'm looking at there. You do have shorts that are still shorting the market. The funding rate is mostly negative over here. You can see the big negative spike that we had. That means there's still fuel for a short squeeze. Short squeeze is still possible. And there it is. If you have a look at this, the liquidation levels on the lower end, you got the purple zone, purple zone, purple zone. These are massive, massive buy walls that are being defended by some whale. And then you have the shorts over here, which are actual short positions that have been placed. So there is still some liquidity over there to be grabbed towards the upside. This is the chart I gave you yesterday. I said as long as Bitcoin doesn't break down below these levels, then treat this as a range. You can see the way that that range would ultimately create that flag, right? You can expect it's just going to pop between the top and the bottom. These are big moves. As a trader, you can make a tremendous amount of money over here because the move from bottom to top is 6%. Let's quickly grab the ruler. So if you're getting your trades in over there, that's 6.47%. So it's a lot of profit that you can make if you know how to trade these ranges. Next, okay, let's bring up the Discord. The Discord is where we drop the trades, right? So there we have most recent trade update for this one over here, which was taken. Let's quickly click on that. Everything is being given to you. That is how you would trade that range. Let's see if I can zoom in. There you go. So everything for you is in the Discord. Make sure that you're in the Discord. If you're not in the Discord, you're really missing out. And in order to get into the Discord, what you need to do is go through to YouTube, click on the video, pause it over there, go through to the bottom. Let's see, I got, okay, how many? Okay, I thought that was likes. That's not likes. We got 848. We need more likes in order to give you the trades. Okay, click on one of these links over there, 𝗏𝗵𝗿𝗏𝗍𝗏 OKX. You can also use NordVPN. If you don't have a VPN, it's like $3 a month or something. You get a sign-up bonus over here, and you get 30 days money-back guarantee. It's like one of those very marked adverts in South Africa. 30 days money-back guarantee. So that's what we're looking at over there. Let's quickly bring the Discord again. Okay, let's see. Look over here. If you click over here, you will get the trade setups. Everything is in here. Scroll back to the bottom. Trade setups. There we have it. Okay, this is some that are this is an opportunity for you right now. We're currently in the level. So we're looking at 𝗟𝗏𝗿𝗏. So 𝗟𝗏𝗏 is right in the zone. I'll open that up and make it nice and big for you. I'm going to take this trade. We can do it together because we're a team, right? We can do it together. Let's click on over here. Let's grab the Discord. So you guys can see that I'm actually taking it. All right, let's quickly make this, move that like that. So you can see both of them. All right, let's go. Derivatives, perpetual. So you guys that are not in the Discord are getting away with murder here. You're getting a free ride because this is actually only for the Discord members. But you know, they sometimes they say try before you buy. So I'm letting you try. Not that you have to actually even pay anything for this. Okay, let's grab 𝗟𝗲𝗍. I hate these pop-ups. Okay, let's put in a trade. I'm gonna run it with. Let's see, what is the risk over here? Stop at 0.034. Stop at 0.034. 0.034. Okay, so we're looking at our stop all the way down here below those swing lows, 6%. So I'm going to go with low leverage. Going to run it with pretty much just like a 2x leverage. Just something you could trade even as a spot position because your stop loss is obviously quite far. And I will start to scale in the position. If prices move down further, I'll re-add into that position. At the moment, I'm going to drop this from isolated all the way down to pretty much, I'll even go as low as a 2x leverage. And I'm going to put in 10% of my equity over there. And let's go buy long. Okay, there we go. Trade entered. And then obviously now I'm going to quickly, let's just make this big for you again. Okay, put my stop in. Stop over there. We can re-add into that position. So I'm running a $5,200 position over here, and we will monitor this. There are more trades in there, but I'm not going to give you those for free. All you need to do is go into the Discord over there. It makes the Discord manager ecstatic. He gets so happy, he actually buys me lunch. So that is the reason that I asked that of you. Make sure you get in there, give the video a like, hit the bell notification, and subscribe to the channel. And I will see you guys all on the next video. You must all have an absolutely stellar day. I appreciate each and every one of you. And cheers for now.